Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today we'll take a look at the Great British Pound because, as you can see on the euro currency, it was really quiet session, so nothing really new. Yesterday, actually, it was the inside session, and we don't have any progress and nothing to discuss. So we can see here on the euro, this was a minor candle just inside of the previous one. So almost everything we have said yesterday concerning the euro currency, and mostly we are suggesting that the chance on the downward continuation here looks preferable, because this is not the reaction that market should show in the case of the forming of the double repo on the euro. Now let's take a look what we have on the Great British Pound, because actually this was anemic price behavior within the recent 2 weeks. That's why we mostly haven't taken a look at the Great British Pound. Initially, if you remember, we have talked about the possible also some retracement here, because in fact market stands in the strong support area. So we'll take a look at this level. So this is major fib level. From these lows, as soon as this upward action has started in January of 2017, this major 3.8 support stands, and this is really very strong support. It's also confidence 33.85, 34.63. So daily confidence support. Market just has touched the upper border of this confidence, this major level. Also, as we have estimated, this is a 127 extension of this BC leg. We do not have the butterfly here, but when you do not have the clear target, some kind of the ABCD extension, you could use the extensions of the retracements to estimate for some support area where it could stand. Finally, slightly below the confidence, we have the 33.50 approximately. This is XLP extension of this ABC top pattern. As I said previously, since the C point stands slightly above the A, so this is not typical extension as we usually use, but you could use this way to estimate the possible support areas. Maybe this is not the usual target, but that's the area where support also could come. So that is, as you can see, rather significant support cluster on the daily chart. And it's logical to suggest, as we thought previously and 2 weeks ago, that here is some retracement could happen, or maybe double repo buy will be formed, because indeed the collapse that has happened here is very impressive. Market has shown close above the 3x3 close below, but we do not have the close above. Besides, guys, in the shadow of the last event, when you see the reaction on the euro currency, we saw the decision of the Bank of England on the rates. We know that the situation in the United Kingdom economy is far from the positive, and Fathom Consulting thinks that the United Kingdom economy stands in a recession. So in this situation, it's very difficult to suggest some significant upward bounce here. So minor retracement maybe could be formed, but taking into consideration this price behavior, I would say that hardly we will get any meaningful bounce here, because this is not the way how double repo should be formed. Because take a look at these long tails from the upper part of the candles, so upper tails, it's really very significant. It means that the additional bearish pressure stands here, and maybe only the existence of the strong support prevents market from the further drop, because euro currency, as you could see, recently has dropped. This downward continuation has followed, but on the Great British Pound we do not see it. Market mostly stands flat. Besides, here market is not that oversold. On the daily and the weekly, this is just the fib support, although it is rather strong. So what we have on the intraday chart? On the intraday chart, guys, we have the widening triangle is forming broadening bottom And also you could probably imagine here a kind of the diamond or something of that sort, but that mostly indicates the indecision price behavior. Why? Because take a look where market stands. Market is calling around this blue line, which is the weekly pivot point, and then price action stands precisely between the weekly pivot resistance one and weekly pivot support one, and fluctuating in the equal degree around the weekly pivot point tells that market stands in decision. So no direction, no new inputs for the price action stance. Also, this is the monthly pivot support one. So market has dropped below the monthly pivot point. This is the support, monthly pivot support one stands here. So that is potentially, as we know, this is first the widening triangle, later this is normal triangle. This combination usually leads to fast exit of the price, either to the upside or to the downside. And the direction that market will choose probably will show you where the common action will follow. Potentially this could be the bullish reversal pattern, and market indeed could show this upward action, but just because the market stands in strong support area. But if you would like to take the position, well, you should be ready for some collapse here as well, because what I do not like here, guys, actually, is the market is not able to form any double repo pattern and can't show the behavior that's typical for the double repo in the current condition. Any upward retracement is very weak. Also, take a look that here trend mostly stands on the bullish side, but price action stands flat. This is not a divergence, guys. This is just the kind of the bearish dynamic pressure exists here, which could suggest the further drop. Besides, take a look at our hourly chart. If you remember, 2 weeks ago we have talked about this steep ABCD pattern. Market hits OP target inside of this channel, but no meaningful retracement has followed. Market just turns to the sideways consolidation. So when the market can't show any reasonable bounce up from the confidence support in the daily, up from the OP target, from the monthly pivot support one, just stands flat, it looks really heavy. So it means that some additional bearish pressure exists at the first attempt of the market to show any meaningful retracement. That's why it makes me think that the chances on the downward breakout here looks better. Besides, also we keep in mind what is going on euro currency. So theoretically, of course, it's not forbidden to try and take the position with a stop somewhere below these lows, and maybe some event will be released, maybe something will happen that will let market to show upward action here. But currently, in the current moment, the indirect signs, I mean this bearish dynamic pressure, minor pullback, weak respect on the strong support, all this stuff makes me think that market really stands under bearish pressure right now, and that makes me think also that chance on the downward breakout looks more probable in the current situation.